Hello, everyone. Yesterday, I said at the close that splits, when stocks, after a big, huge run, start announcing splits, they're done. And we recently had a split in Google, and I stated 2 for 1. And when I heard Apple had a split, I said, yeah, now Apple's splitting 2 for 1. Little did I know, they meant 7 for 1. So when we talk about excessive splits in the stock market, it doesn't get any more excessive than that. And I don't think I have. Where is it? All of them. I don't have it. Well, the last time that or the Apple split, after a long uptrend, was at the top in the year 2000. That started then a big bear market. So if history is an indication, then the other time that it did it, it was in 2005. But that was at the beginning of a rally attempt after a long uptrend, doing a 2 for 1, and now doing a 7 for 1 with a stock chart pattern that looks like this is absolutely hilarious to me, because I can see split if your stock's expensive and it just keeps going up and up and up and up. But a split 7 for 1 when the stock's gone nowhere for 2 years tells me that you're trying to make it cheaper to draw investors with less cash in, so that and before that they split, you can guarantee that people that have a ton of shares, let's say you have 30 million Microsoft shares and split 7 for 1. You now have 210 million shares you have to sell. So I'm pretty sure people will sell this. And then on top of that, we had the earnings out of Facebook. And for the first time, we didn't get a gap up in earnings that held at all. And so Facebook gapped up, closed lower, and actually managed to close below 61.36 where it closed the day before. So quite a poor session with earnings. But there are some stocks I'm watching out there to eventually break out. SMCI had blowaway earnings that I liked. I thought I liked SVU earnings. Turns out for a grocery store, that's what I get. VDSI is another earnings winner that I loved their report, so keep an eye on that one for intraday breakouts. Zoom is another one, watching for intraday breakouts. Cool, would like to see this one chill out a bit and then break out. And SWKS, the buyable gap up, it's just too short of a base for me and too far extended for me to buy a gap up like that. It would have needed to gap up just to barely above that, to right around the $40 level. I'm not going to buy it up at 41.50. Hopefully this stock can calm down, move sideways, and break out again, and then we can get long. And then SKS is another one that, oh God, SKX is the other one I'm watching for an earnings winner to base out sideways and possibly break out if the market wants to run. Also, there's rumor of JSO signing a deal with Tesla, not confirmed yet, but that should be one to watch in case he wants to break out off that news. Besides that, I got a signal from FE, woo, electric utility company, Hawaiian Airlines, yay, another transportation stock. And then TRN was the best one, transportation railroads. And this is a 5% signal. I want to get 5% long the stock right now, as long as earnings aren't coming up. Oh, well, guess what? Earnings are coming up on the 29th, so guess what? This is not a new long. If you want to purchase it, go for it. It's a little bit risky for me. And on top of that, this chart pattern is a little bit, V-shaped, I guess you can say, on the short term, but it is okay. I would have taken it long 5% if it did not have earnings coming up. But since it has earnings, I'm just going to completely pass. So I have no new positions tonight. However, what I continue to find extremely odd is how the Dow Jones Industrial Average can be near new highs, the Dow Jones Transportation Average can be new highs, and the Dow Jones Utility Average, what the hell, where's my Utes? XLU will do. So how can the utilities be new highs? How can the Dow Jones Industrial Average be new highs? And how can the Dow Jones Transportation Average, confirming the Dow theory, be new highs? Yet stocks look like shit. Yeah, the Apple gap up is nice, but it didn't close higher than where it opened. 568 closed 567, so no follow through there. I just am having a tough time being super bullish on this current tape. We rallied today once again despite the Apple and Facebook earnings. Look closely, volume's below average again. Another below average volume rally outside of this one day where we got the intraday reversal of the 200-day moving average. We've had below average volume. And the majority of that volume on that reversal came in the morning as we sold off. So the entire rally off the 200-day moving average has been on below average volume. Same with the Russell 2000. Same with the New York Stock Exchange. It's just a little mind-boggling here, and that's why cash is king right here. And on that note, SOXS, a pretty bad session. A confirmation close below our most recent 25.97 close, closing at 25.60. Another 50% is off there. SQQ closing at 54.20. A rule is a rule. Low a day there, 54.22. Low a day the next day, 54.21. Close at 54.20. I know it's only 1 and 2 cents below that low a day. A signal is a signal is a signal. That's a 50% sell signal. Like I said, if all of a sudden we break down again and volume picks up and these charts continue to look like they do, like in Priceline, like in Tesla, like in Facebook, like in Twitter, if I continue to see this like in Goog, I'm sorry, Solar City. I'm going to hit this market again. But for right now, we're too choppy, and that's indicative of a market that has its 250-day moving average too far away from each other. If that 250-day can get around each other, we start screwing around during the summer and roll over going into October. I will hammer the shit out of this tape. But for right now, it's cash, man. It's cash, 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 cash. Can't stress that enough. I've been doing this forever. I'm friends with a ton of professional trend followers on Facebook and Twitter and everybody. We are all in the same agreement. Some of them aren't as bearish as me, but I don't know, man. I've gone over data point after data point. This market looks fucked, bottom line. This does not look good. IPOs, splits, sentiment, VIX, 5-year, 30-year treasury yields, you name it, geopolitical situation, you name it, we've got some problems. Also, CRVL is closing below the 50-day moving average. A confirmation lower volume close below the 50-day moving average. That's a 50% sell. And unfortunately, AT&M, it started off right in one day, and God, we should have known it was going to be too good to be true. It is now reversing on heavier volume, and it is closing below the 20-day moving average. Since we don't have gains immediately, we got to go ahead and cut our losses, so we'll sell 50% of that. That's why this was only 1% of my account capital and not something like 50% like a TRN would have been if not for earnings. So SQQQQ, SOXS, CRVL, AT&M, 50% sells. There are new longs. This is my favorite one. This is my second favorite one. This is my third favorite one. And that's all I have. Utilities and transports, with the market looking heavier and heavier each and every day.